Hey folks, doing a sound check. Just let me know if you're hearing me. Happy New Year. Volume okay on this thing, just making sure it's working okay. Well, it's time for the Runa. So, Happy New Year, everyone. A lot's happened since I took off almost 2 weeks ago. Pretty crazy market, to say the least. And I was pretty much off grid a lot, so it was very difficult to keep up with things. Yeah, it's probably better now with this. I'll put the mic up here. I bet that's better. What do you think? Happy New Year's, everyone. Hey, Brooks. All right, we'll get rid of the music. Just it's kind of a hangout session. Just kind of getting back in the groove. Looking forward to Sunday night and getting back into doing videos again. A lot's happened in the markets. Doing some reviews. I'm hoping to have some insights into next year, and I think it's pretty interesting. A lot of things are going on out there, and I'll get into it a little bit today. I've just been looking at a few things, but just like I said, just hanging out here for a few minutes, trying to get some folks online, see who shows up. Tomorrow the markets are open, not like last week. The markets were closed. There's some kind of special rule that kicks in for tomorrow, so I believe it's an abbreviated session. So what we're seeing today is probably the bulk of what's going to happen for the rest of this year. Although we've been known to see some big things happen on these shortened holidays where some folks can move the markets around, but it's pretty amazing that we're sitting here virtually on the high tick of the year at the end of the year, which is pretty amazing to say the least. It's everything going on, including the Omnicon, right? I call it con because it was a con. I think what they're tracking now is the common cold, and I think there's a lot of folks in powerful places that aren't happy that more people aren't dying. I know that's rude to say, but you know, it's interesting. I started to put this on Twitter. I will earlier. It's something I was in Texas, and gas is I paid $2.60 for a gallon of gas. I guess when you got a lot of oil, you get cheap resources. So not only is Texas alive and well, but the fuel is cheap. It's literally, I think, right at about 80 or 90 cents more here in Arizona than it is there. So it's been good, but it was nice having a break. But it's also tough having a break because I was literally on a piece of junk satellite setup because I was pretty far off grid, and it was very, very difficult to spend much time on a satellite. Don't have Elon hooked up, but that would be nice from the Starlink, and just on a typical Hughes satellite. If you've ever used one, they're absolute junk. They shouldn't be allowed to even charge for that service. Anyway, yeah, good to see everybody back as well. We're going to kick in with the live trading room next week. I think it's going to be Monday. I'll send out an email for those of you that are part of that. It looks like it's going to be Monday, Tuesday, Thursday. I have an obligation on Wednesday that is, I'm not going to be able to be available. There's some things going on yet that I'm still solidifying. We're really close. I'm hoping in the next couple days that we're going to finally be ready to get the indicators out on TradingView. So that's something that will go. So is the volume still kind of off? Is that what I'm hearing? I'll crank it up a little bit more. Let me know if that's a bit better. That's funny. I'm just looking at Fit Coach, your comment there. Yeah. Strange world we live in at the moment. So just a couple general comments. We got quite a few people here on board, so we'll go ahead and start talking a little bit of some of the things on my mind. I mean, the S&P's up 15 cents right now, so not a lot going on. But one of the things that I was looking at that I think is interesting is some long-term charts. I just talked a little bit about this, and I guess the great thing out there, everybody from Peter Schiff, anybody that's been around that's even close to my age, is calling for this monster correction, 10 or 20% down. Unfortunately, I don't think that's what's going to happen, and I'll talk about this on Sunday night, but there is just trying to this trend is not going away for a while. I mean, a long while. This chart that I have up here right now is basically, let me just go to this screen here for a second while I'm talking about this. But this is the quarterly chart of the S&P. Yeah, basically going back to 1872, long-term wave count. We're in a wave 5, but just looking at the PPMs on this page, I can tell you one thing for sure, that this rally is not over yet. And so one of my buddies used to always say, the markets go in the direction that can hurt the most people. So I suspect that's probably up yet. It just looks like that. We're looking at massive acceleration on these PPMs here, and we typically get up at or a little higher than the levels we are now, but the first and second derivatives tend to have a different formation when we get to a top. Even looking at the top at 29, going back to 2000, and the top in, we'll say in 2008 was actually part of what started in 2000 and 2000, and that was an ABC wave 4 setting up. And I remember talking about this back in 08 and 9. I know Brooks is on here. He's known me for that long, I think. So he probably remembers me talking about this was possibly a wave 4, and there's a whole nother sequence on the upside, which obviously there was. But the point of taking a look at this chart is this trend that's in place is not over, And in fact, it's accelerating. That sounds weird to say in the same sentence, but that's exactly what's going on here. And yeah, it's just a bizarre world we're living in. So, you know, a lot of things that are going on here are really looking at, you know, the best way to put it, all the stimulus that's in there, you know, the Fed's balance sheet's getting up to 9 trillion. They're still trying to do build back better. And I actually think the reason why the market's doing as well as it is because they haven't passed that bill. I have questions that could come in to at least set up some type of maybe sideways correctional phase or something as we go through 2022, just through the politics of it all. It's going to get very interesting because the polls right now would suggest that there's probably a crazy red wave of some sort coming. Whether that's good, bad, or ugly, I can't tell you right now, but that certainly looks like every day that goes by as we get into 2022 it's going to be more and more difficult to pass this Build Back Better bill because there's a lot of ugly taxes in there. And you're talking about, excuse me, close to 80,000 IRS agents to run around and spy on every American they can. Think about that. That's a crazy number. And so anybody that thinks new taxes, new things aren't going to affect you because you don't make X amount of dollars, you're wrong about that. So let's just hope that the senator from West Virginia and one from Arizona sticks on with their word and what they're saying here and keeps that thing away from us. But there's still an issue that I'll just kind of touch on for a minute. And the issue is that the Fed needs to bleed that money off of their balance sheet. Remember, I talked about this, I remember a number of weeks ago, that Ben Bernanke told us when it got up, you know, up to 2 trillion, he was going to get it back under 1 trillion. Remember that story? And of course, here we are, you know, at 9 trillion. So that didn't happen, and it's not going to happen now either. They're not going to be able to downsize this very well. What they need, and I've talked about this for a year and a half now since this whole piece of junk started and all the stimulus and shutdowns and reopens and everything we've been through. I've talked about a fair amount about this, is that they need a way to spend this money and get it back in the economy. And there might be some other mechanisms to make that happen. We'll have to see, other than like the Build Back Better bill. There may be some other things that come out. But the Fed's kind of stuck on their balance sheet. They're going to taper. Maybe they'll taper faster. Inflation certainly isn't turning around anytime soon. But that's the one thing, and I talked about just a little bit of a mini rant here, because one of the things that I've talked about is now that the Fed has admitted that it's not transitory, it probably is, right? So I talked a little bit about this. Let me get to another chart here on let me get to a different chart here, and let's go to the Baltic index, and let's go to weekly first. One of the things that's been happening, and I mentioned this over some broadcasts. I know it's been a couple of weeks since you folks listened to me, but the Baltic index is coming off pretty good. It's still going down overall. The patterns are down. So a lot of these metrics that were driving things have downticked. We know that crude oil downticked pretty good. A lot of the metrics have turned back. So there's definitely some trends going against the inflation. But I think if you were out there and you wanted to know what the consensus was, everybody's expecting higher interest rates and inflation to continue. and therefore everybody's also expecting some kind of correction. And I can go back to some of the live streams that I did back last year, and I would tell you that I mentioned this, and it appears to be playing out, that your best inflation hedge was going to be the S&P, and that we'd probably get up to 5,000. There were some crazy numbers I was throwing out there, maybe even 7,500. Who knows what kind of numbers we can get off of this? But this is where, when I go to this other chart I was just showing you just a second ago, when I bring up this chart, there's no signs that this trend is about to abate. So the trick is going to be, and I'm going to work a lot on this, especially for those of you in the live room. We're working on a couple things. I meant to talk to Jay before I came up, but but we're working on some indexes, a wave tech, maybe 100, 150, some sub indexes. We're going to start putting out our own indexes, and there's going to be like a buy and hold index. There will be also, which will be an equal weighted, but then there'll also be managed index, which will cherry pick using our models to determine which parts of those indexes would be long at any given time, and go into some of the metrics that I talk about on the database. And I'll bring that up before we go. I'm not going to go into a lot. I just kind of wanted to come out, say hello to everyone, and back, and Happy New Year, and all that kind of stuff. That's really the main purpose of today, but just to kind of chat a little bit about the markets here. What I do want to look at here, let me move this off screen here just so I can see this, just see what you're talking about. So let me see here, just a couple things here. Yeah, electric bill. Where are you at, Pedro? Just curious. Up by 17%. Yeah. Well, you know, so Mr. Brandon is looking into all this stuff, because now the problem is not what the Fed's done, not what the policies are that are going on, not cutting off crude oil sources and not cranking up the U.S. oil patch. It's the companies are gouging you. That's who the bad guy is here. And you know, I'm telling you, we're going to see. We've already seen stuff I thought we'd never see. We're going to see more of that stuff, and it's going to be more extreme, I suspect, as we go by. Oh yeah, Puerto Rico. I looked at the possibilities of moving down there several years ago, right before the big earthquake, and it's like, you don't want me to come there because there'll be every earthquake in the world. Jay can tell you, my son that's on here, that every time we moved to a different place, they had like the worst weather in like 100 years. We moved to Australia and they had the worst winter in 100 years. Moved back to the U.S., they had the worst a 9-year drought. And then I moved to Lake Tahoe, and I saw that Lake Tahoe got 17 feet of snow in 1 month, and I think we got 14 feet of snow when I was up there. I had to have my roof shoveled on my house 3 times. Literally shoveled the snow off my roof because worried about the weight collapsing roofs. There were all kinds of people with roofs that were normal roofs, not the big, you know, alpine peak that slid off, but the normal roofs were actually collapsing. So that was the beginning of global warming, I think. But anyway, so but yeah, so Yeah, that's going to be really interesting out there. I I found I should put this out. I need to find a way to get some information. I guess I could use Twitter on this. Uh, but I found a really interesting TED video that I watched the other day, which was really surprising, from somebody talking about how the more that you try to go green with solar panels and wind, the higher the prices of electricity goes. Germany's a good example, and France is a good example. France has their cost of electricity, they're primarily nuclear powered. We're nuclear powered here in Arizona and hydro. So we're like one of the greenest places in this country. And maybe that's why all these companies and Arizona's business communities expanding massively right now. Maybe that's what's happening. But France is 50% down when Germany's up 100%. And the more they try to go to green, the more costly it gets, and they have to keep filling in the gaps with natural gas and all that kind of stuff. So it's interesting that there's too much intermittency with solar and with wind to depend on it. So anyway, yeah, I'm sure. Yeah, yeah. I see David Ford's talking about 100 degrees Fahrenheit. Uh, so that started the cycle when we lived in Australia. We lived in Melbourne, and we had a winter in Melbourne. We moved back to the U.S. and we had winter in the U.S. We had back to back, but we left it. We did winter in the U.S., went to winter in Australia, and then winter back in the U.S. We had 3 winters back to back. So, yeah, like I said, you don't want me moving to wherever you are. That it's going to be bad weather. Something bad's going to happen with weather. In fact, I had a whole. This kind of reminds me. Just like I said, this is almost like a fireside chat with a little bit of stuff mixed in with some market talk. And but we just had. I guess whenever I go out of town, like I just did, things happen. I used to go to California a lot, and I have one of our old clients, because every time I go to California, markets would collapse. I have one of my old institutional clients said, please do not go to California anymore, because every time I leave, something big happens, and that certainly is what we had before. Yeah, I saw this negative move coming. I'm sure they are going. Let's bring those up. Yeah, so now we're looking. I thought the S&P would end up probably down about 9 or 10. We're looking at 9 right now. Let me get rid of something here. Yeah, so we have here we are down 10 now on the S&P. I think as we come into the beginning of the year, it's going to be interesting. I hate when we're at the end of the month. We got one more trading session for tomorrow, but we're at the end of the month. We close on the high of the month, high of the year. Everything's at the high. I do believe there's a possibility of a trading range to set up, but I just don't see any major debacle 10-20% type moves on the markets coming right now. We'll see once I get back in the flow of videos every day and back full into the analysis. I think that will be what we'll be looking at from that standpoint. Sounds like I'm moving the ring still. Oh, I see you're talking to someone else. Okay. Yeah. Anyway, don't have any champagne, but I'll toast to you folks for with the Runa. Thank you, Mohammed. Appreciate it. Let's take a look at a couple markets. One of the things that I've been ranting on for years and years, we're finally get some move in gold, and that's encouraging. PPMs are starting to turn up. Things are starting to look pretty good for gold, and that's been the mixed scene, right? You've got expectations of inflation and gold's flat. And I know all the manipulation stories around silver and gold as far as that goes with the paper gold and the paper silver and how they're manipulating the markets with this. But once we get back into analysis next week, you're going to see that some of the numbers I've been talking about here, we've got a target at 1882. We're starting to finally break things out, not substantial yet. We'll see how it opens up. We get to start with not only a new month, but a new year. Everything is going to come into play here as we go forward. I think it was interesting just bouncing around a little bit with just some general comments on some markets. I saw somebody comment about buying ARK-K. My favorite. You're getting the RTX sell signal for today, but there is a cycle low due today in ARK, and but if you look at the portfolio of those stocks, they are beaten down pretty good. And when somebody, you always know this, that Kathy's talking about her stocks are in deep value. That's just the funniest thing I've ever heard in my life, I have to tell you. I was joking the other day, DraftKings was getting hammered, and the last time it got hammered, she doubled, tripled, quadrupled down. She's basically a buy the dipper. She just takes all the money and just keeps pouring it in. And I don't know how much, I have to look at the outflows of that fund, but she's been able to influence a lot of people that follow these stocks. But I have to tell you, just a comment on Kathy, is she made a comment on, I think it was CNBC, one of the shows, that she looks out 3 to 5 years, the story, and that 3 to 5 years from now, most of the stocks that she owns are going to quadruple. I have to tell you something, as someone who has been registered under SEC, worked in hedge funds, all this stuff, you cannot say that, okay? I made a comment on Twitter that I think the SEC would like to know about that. That's forward looking, and that's actually a prediction about the stocks that she owns, which is a very dangerous thing to do, because if 3 to 5 years from now, that statement, you know how the internet is, it never goes away. Someone's going to say, I bought this, and she said it would quadruple, it didn't quadruple. The risk in saying those things are pretty substantial. So to me, it was a moment of desperation to try to get someone to buy the fund. This is a daily chart I've got up here right now. I'm not really a Kathy troll. It's just most of the stocks she owns are crap stocks, and they're maybe 3 to 5 years from now, I'm willing to say that 50% of the stocks that she owns probably will even be still underwater, or it won't even be listed anymore. I don't know if you're aware of this, but in the last 20 years, the Fortune 500 stocks of 2000, less than 50% of them are still in business. Now, some did get bought out, but for the most part, these are companies that just fade. When you look at all the stocks that came out in 2020, there's just a lot of these stocks out there that got pumped up in 2020, got a lot of new investors, everybody got crazy. They trade just like penny stocks. And I'm thinking about doing a video on why everybody lost so much money, and they were leveraging them, all kinds of stuff. And then this collapse just keeps going, and there's so many people stuck in these stocks that is owned by ARK. They're going to be, there used to be an old saying back in the day when I started in the business in 1980. There's a closing bell in 1980. was that there's stock ahead. Well, there's so much insider stock ahead, leverage stock, people that didn't get wiped out or close to wiped out are stuck in a lot of these stocks. And every time you get to a level, you'll see resistance and they'll sell them back down. And no one's going to want to miss the next rally. And so it's going to be interesting from that standpoint. But there is, like I said, a cycle low on a weekly basis. So this thing has got this. We're looking at ppms at minus 1.95, 1.11. There's multiple weeks of consolidation is going to happen. There's not going to be some, I don't believe there's be a sharp snapback rally, but I have a list. I call it my red list on, I follow a few millennial type investors, and you folks should know that investing, the term investing and the stock market should not be in the same sentence. There is no such thing. And there's a price that is cheap and there's a price that's too much, and you call it timing the market. But I'm telling you, a bunch of folks have read books by Warren Buffett, and a lot of people now, they think they're Warren Buffett and they're going to go through their life like that, and they're going to find out what I found out when I was 20 something years old in this market. I started when I was 27 years old. I started in the markets, and you just learn a lot as you grow up and you watch things happen. I've been through 3 IPO cycles. This one's just like the last one, and it's like the .com where they bursted everything up, and now the companies, a lot of these companies are in what I call death patterns, and they will just waffle along and probably not do much. And the reason for that is when the stock is hot and it's going up, there's a lot of leverage that you can do and a lot of things you can do with the stock and its currency. And when it comes back down to maybe the initial IPO or lower, there's not the leverage, and these companies can't get the financing. There's things that they can't do. Although in the markets right now, you can finance just about anything. There's nothing that's not that you can't finance. So until that goes away and cheap money goes away, then there's some possibilities for these companies to come alive, and the good ones will survive and come apart. Ultimately will be part of the markets and go on. But I think that I think these stocks, like NRK, have a lot of work to do. And I mean, I can't even figure out why she's buying DraftKings. I have no idea. Okay, so what else can I'm just going to do a few more minutes here. Let's take a look at some of the closes here. The S&P finished down 14 handles. And let me go over to a daily. So down 14, 47.78, the high 48.08. And we look at the market grid for today. R2 was 48.11, so we fell short of an R2. S1 47.80, 475 is the low. So right to S2. So let me bring that up real quick. Yeah, so I'll bring that up on screen. You can see that. Let me go full screen. So this is the cash, 40 S2 47.74, low 47.75. So S2 hit on the upside. We fell just short of R2, so we did an S2 R2. Volatility has been kicked up pretty good lately, but it has been contracting from where it was. So we're seeing some acceleration in the ppms from that standpoint. Weeklies are still very, very positive actually. The last buy signal on the intermediate models for the S&P was at 3,600 on 11/20/20. So last year, a little bit over a year, it's been long all through this thing. It just continues to climb the wall of worry. I won't go through. You guys know that this formation on the PPMs is the trend maintenance mode. That's why we just continue to climb the wall of worry, and just basically have never closed. Maybe one time we closed under the 21-week moving average during any of these little mini corrections that we've had. Yeah, Pedro, as far as the market breadth goes, let's talk about that. Let me let's go over here, and you folks haven't seen the database for a while, that those of you that aren't Wave Tech. So right now, 29%. This is really an interesting stat here. Let me zoom in on this. So 29%, this is the intermediate models, are long right now. We're setting an all-time high. And this continues to actually show how narrow the breadth is. And I've talked about this multiple times. It's kind of flashing back in my mind's eye to some of the streams that I've done, talking about how the fact that the number is really low is telling us a number of things. But what it's telling us is that the market is narrow. It doesn't mean the market can't go up during these periods of time. It just means that the number of stocks participating are very few, and that does set up some vulnerability. If we go over to the daily, take a look at that. It's back up above 42, 42%. I'll just go over here. So we're back to 48%. Just last night we had a basic bullish buy. So this has come back above 48. I miss having that documented every day as far as what goes on the channel over the last couple of weeks. But when I left, it was 28% roughly, and now we're back above 42, which is a good metric. So on a short-term basis, there's a fair amount of stocks starting to participate. On an intermediate basis, they are not. So, you know, that as far as the breadth goes, narrow breadth and low volume markets can go on for a while. And a lot of folks want to always equate volume to, you have to have volume to validate the market. No, you don't. I always said the day they start telling me that it didn't trade enough, so you don't get to have your profits, I'll pay attention to the volume. Volume is important to that there is some, but it's not what drives the markets. It's the aggressive buying or selling that pushes the markets in a way. And I should probably do a video. I've went on some little rants in live streams in 2.5 hours about how pricing, how price discovery is done. I should probably go and take the time to do a video on price discovery and what moves the markets. And it's not volume. It's so yeah. I'll make note to myself to do something like that. So let me just see what you folks are talking about. We'll wind this down. I just wanted to thank everybody again. If you watch even the replay, you know, thanks a lot for being part of the channel. Looking forward to 2022. There's a lot of things that we want to start working on. Indicator distribution, getting the trading view thing going out. A couple of things I was able to find that we that in order for us to release these out to the public, we have to have an automated way of getting the accounts turned on and off, and that unfortunately TradingView hasn't made that simple to do. But I recently found some things just in the last couple of days I believe will make that easier to be able to accommodate, because it's just too much to try to manage these manually. Yeah, that's my. You can quote me on that, Nick, for sure. And because I I have I've been in places and watched a lot of volume changes hand, and nothing moved. So it's the yeah, it is the aggressiveness, and you see it all the time. Maybe what I should do is probably have a level 2 screen. As a matter of fact, saw it really this morning right off the opening on the S&P on the E-minis. They actually had a range here. This was an interesting range right off the opening here. Let me make this full screen here. But this was the opening, and we had a range of 47.86 to 47.99, 13 handle move, and that was in about about 6 minutes. And then it went in next 6 minutes, it went almost all the way back down, and there was virtually no volume, but you had aggressive buyers and everybody turned sellers, and it was very interesting how that set up. That told me a lot about the nature of this market from that standpoint, because there was some pretty good opportunities when at that point in time. Is there's some trades that could be done off of that level into this consolidation, and this was right into that rebound rally right at 8:19 this morning. So that there was definitely some opportunities. For the rest of the day, for the most part, was chopped until the end of the session, where we finally got some nice downtrend going from that standpoint. Yeah, so there is I think a half day trading. I think they close at 11 a.m. our time. I have probably not a lot of intentions of being around tomorrow. So this would be the final day. I just thought it'd be nice to come up and hang out with you folks for an hour and just see what's on your mind. So please, if you have any questions you want me to talk about, go ahead and ask a few questions. I'll rattle on. Yeah, I'll do let's take a look at Bitcoin, because I didn't really touch on that. I think Bitcoin's been interesting. Let me get over to a daily. And Bitcoin's been, since before I left, was hanging around the 200-day moving average. It pokes a little bit below it, but it's been hovering right along here, and we're starting to see there is a long position by the models right now around 49.3. It took it on, but it's fading a little bit. But there's objectives of 56.63, but we're ways away from getting anything going on there. Take a quick look at the weekly. Yeah, so weekly, like I said, the 40-week moving average, let me get that up on screen. Let's go full screen so you can see it. Sorry. Yeah, the 40 week average is 48,304. So we're trading just a little bit below that, but we've been waffling on both sides, and there's still a fair amount of overhead resistance. 54. Actually, it's dropping about $2,000 per week, so it's going to be 52. That'll get us close to the 10 and the 21 crossing on the downside, which typically can start the beginnings of a bottom. But it looks to me that at least coming in, everything looks reasonably stable along that 200-day moving average. Yeah, I talked a little bit about gold as well a little bit ago. We have targets of around 1880 on gold. We're starting to finally get some movement. I'll bring this up just for a second again. The monthly charts are really starting to turn. This is really what needs to happen to get the big trend to move here. Is we need to get back above the 33 level, 1833. Above that level, we should start to see market grid, some acceleration in the PPMs on a monthly basis. We're coming into a new month here. Well, on Sunday when we come in, there'll be some new stuff. So, you know, I'll do a full update on Sunday night as always. So I'm looking forward to getting my legs under me as we come in. So I got an extra day or so of not doing a lot. So we're just hanging out. But I appreciate everybody. Yeah, I think inflation is the best thing, for not the biggest problem. It is the best thing, because that's what's driving the all the markets higher here is inflation. That's what's going on here. That's what's been going on all last year. So that's why we're sitting here with inflation at the highest it's been and the markets at the high. There's no problem at all with inflation, because at least at the moment there's I would say for the most part we still have supply chain type inflation hitting it. Companies feel like they have pricing power because of all the liquidity in the markets. I think where inflation gets scary if we end up have more of the truly getting into a monetary type situation, you know, into a Zimbabwe type thing where we just see, you know, prices going parabolic, or maybe Germany 1921 kind of thing in the Weimar kind of environment. Something like that might be really, really interesting. Just a quick mention, and somebody that I follow on Twitter, I don't follow a lot of people, but mentioned this a few weeks back, but the whole Louisiana Purchase and John Law, who was an economist, there's a couple pretty good videos out there. I'm trying to remember this guy's name. I think Boyle did a really nice job at covering, Patrick Boyle, Boyle. It's kind of interesting because what you're seeing out there right now is some of the iterations and things that they did to keep the whole Louisiana Purchase thing, because you know, basically this John Law guy got the French to buy into this thing, and that's how, you know, there was a section that basically the entire Midwest of the U.S. all the way up to Canada was owned by this entity. And so it wasn't until after the great bubble and the collapse, but some interesting parables to watch there. So that'd be some interesting stuff for you to kind of watch and just look at what they've done there. History is important. with a lot of stuff, but I would say that you have to have context when you look back at history, and whether you look at a 29 to 44 or some period of time like that, what happened with monetary expansion. You start to make too many comparisons to what's going on today, and they don't really match up as well. There are elements that do, and there's a lot of, this is what is driving a lot of people, I think, in the wrong direction. I've always managed to be reasonable about these events and say that, yeah, there are similarities, but we live in a different, the context is different today than it was, whether it's the collapse of 1870 to 77, or you go through all these major collapses. They had similarities, and there is ultimately something that breaks them, and we're not there yet, and I'm not sure how far this situation we're in can go, and where virtually everything's being engineered. Your body's being engineered with the vaccines, the money is being engineered by the Fed and the governments, and now they're trying to engineer social interaction. Everything that's happening here is this view of the new world, and I'm not sure as an older man that I'm that excited about it, but it's going to be, you younger people are going to have to figure this out. Guys like me don't have a whole lot. We can talk about it all day long, but you folks are the ones that have to deal with what's going on forward, especially those of you that are say 30 plus. I think the millennials have the biggest job on their hands, and maybe some of the lower end of the Gen X, but I think that's the group that's going to have to figure out how to move this forward. You folks, if that's you, are going to be the next ones that have to take over. I remember when I was 30 something thinking, I realized looking at all the executives of major firms and people I looked at, that everybody that was running the companies were the, let's say, 48 to 60-year-olds, right? That's kind of the sweet spot. And you folks are next in line. You're coming in, and by the time you get to, I think my first executive type role was when I was around 38 years old. That's when everything starts to come in to, I think, focus, and you have enough experience and life experience, market experience, in my case, to be able to step into some of these roles. And that's just part of life. There's no way to get experience other than get experience. So you can get knowledge, that's great, you know, good job. But experience is what is going, tied together with knowledge, is what's going to move everything forward. And you folks have the really big job ahead of you. So anyway, so enough for the old man lecture, but that is going to be the that is the group that's going to have to handle this shit. I claim that the baby boomers, my group, it was, so my parents were, my dad was a World War II vet, and all of that group were considered to be, air quote, but true, the greatest generation. I think it was followed by us, who was the worst generation. All you got to do is look at who runs Congress. They're all guys my age or older, right? All the baby boomers. These guys are a disaster. You know, so I always say we went from the best generation to the worst generation, and now our offspring, for the most part, Gen X people, from my viewpoint, and some of the older millennials, those are the ones that most of us boomers had something to do with. And so that's going to be the big job. I would say that I see a small baby and I feel sorry. I always think about Greta Thunberg. How dare you, right? Wait till these babies figure out how much we screwed up this planet. We, meaning my group, okay, for the most part, people in power. Wait till they figure out what's happened. And if there's any history books to read about what it used to be like, and hopefully you folks will do a good job and get this thing back to something that makes more sense than certainly where we are living at the moment. So anyway, that's my 3 cents on life. So yeah, no, I understand that as well. Um, I'm just looking at wave runners, and Gen X and older millennials aren't much better, but neither. So I look at my generation, and going back to those days, we were the hippies and all that stuff, right? Um, I know in some live streams I played some old music and brought out the old 18, 20-year-old Bob Kendall for view, and you know we weren't there either. And even though it doesn't look like you're much better, hopefully there's some stuff there. I'm with Elon Musk that nobody should have a public office that's older than 70. I mean, that's, you know, having this senile old man running the country, a senile old drunk woman running the House of Representatives, and McConnell and all of them, all these old, you know, Schumer, you name it, just all of the old guys that are around Congress. These guys are a joke. They've taken money, they've taken advantage and of everything, including yeah, including trading of stocks and manipulation and getting in on deals. You know, Harry Reid, who just passed away, you know, he was one of the laziest ones out there. He got very wealthy on deals that happened in Las Vegas and a lot of stuff. So all of these guys are dirty. Let's face it. So yeah, I'm looking at what Pedro's saying here. Feels like every generation is kicking the can further down the road. Yeah, but ultimately, this is what I'm talking about, Pedro, is that you're going to, there's not going to be a can to kick, and you're going to have to deal with it. And at that point, that's when this stuff will change, you know. That I guess that's probably at least my hope for you folks, that there's some realization and enough is enough. And you know, what I forget I'll screw up this saying, but something like, if you're not liberal when you're young, then you're not human, and if you're not conservative when you're old, then you're an idiot or something like that. So but the point is that as you get older, you learn things, and you see, this is what I'm talking about, is you see enough of this stuff that you finally go, aha, you don't do this. If you do this, this happens. So you stop doing that. So anyway, so yeah, okay, folks. Yeah, it's pretty funny, but yeah. So best of luck to everybody. It's a new year coming up. I read this. This will be my final sign off for today, since we're hanging out and chatting. I had to get this. This was too good. I think I'm gonna. So those of you, if you follow me on Twitter, you'll probably see this. I'm gonna morph this. But this somebody posted a picture. Said my goal. Said my goal for 2018, but we'll make it for 2022. So it would go, my goal for 2018 is to accomplish the goals that I set up in 2021, which I should have done in 2018 because I promised them back in 2014 and planned them in 2013. So that seems about right. So the 5-year plan, let's see, maybe that's an 8-year plan if you go back to 2013. It's pretty hilarious. So anyway, yeah, the best of luck to everybody. You know, I have I've got great hopes for going forward, that some of this craziness that we're seeing will get under control. I don't think this Omicron thing is going to work out for them. Um, it's not lethal. They can't scare you anymore. And there was I'm sorry, I'm getting on my these little rants, but there was the Soviets always had this thing. If you could scare somebody for I think 1 or 2 months, paraphrasing a little bit here, that you could control them for 6 months or more. Well, they've scared everybody for 2 years, so now they have full control, and that's what's going on here. Is they've got people scared enough that they're afraid to do certain things, and um, yeah, I sure hope we as humans are willing to take risk again to live on this planet, and that we don't get so risk free. I was talking to actually a guy that was my original partner in developing our software. I was talking to him an hour ago or so, and he made a comment about. Um, I'm definitely going to paraphrase. I'll try to come in. He said it really articulate, but basically the way that things are being running is like instead of the patriarchy, the matriarch, right? Which is everybody, women are really good at taking care of things and making sure everybody's safe and all that and making it fair. And, but it's not a good way to run society because society is not fair and it never will be. And things are never easy and they never will be. And things are hard. I always tell people if you started trading, the first thing I hope your first trades are losers. Is the worst thing that happened. I think this happened to a lot of people that came into markets in 2020. Is the first thing they did was make money. It was easy. I talked to a guy when my channel was lighting up last year. I talked to him on the phone, and he was a gambler, one of the community of the gamblers that came in, and he was telling me that this is the easiest thing he's ever done. And I remember telling him, nice guy. I talked to him for about 15 minutes or so. Nice guy. And I said, well, you probably have a few more things to learn. And I think that's what's happened to all the people that have, the list is long, and even just owning ARC has been a lot of fun. But like DOCN, um, uh, Palantir, PLTR, all of these stocks, DraftKings, just looking at a couple here, APPS, that's just another dog with fleas, as they said in the movie in Wall Street. Fubo, Peloton, um, Upstart. These companies bounced today, but they got a lot of bouncing to do to get back. This stock went from $400 to $135, and these are when a stock does that, the chances of it seeing 400 in the next several years, or all these stocks seeing their highs again, are very, very unlikely. So, when I started this rant earlier, as I talked about investing is a joke, it's not real. Investing is not real. The chances of you picking the next Microsoft, or the Apples and all that certainly can happen. Buy 1,000 shares, 500 shares, stuff them away, put them in the safe deposit box. That can happen, but it's not very likely with every one of these stocks that are out there. One of them that caught my eye is DLO, and this is another one. It's dropped from 70 to 30, right? And these are just bad companies, and they got overpriced, and they may operate and make money and all that, and they may survive as an entity, but as far as getting back to 70 again, it's going to be very unlikely. These things were quadruply overpriced. They were 4 and 5 times what they should have ever been. So it's one of those things. I think I'm getting done here. So yeah. So like Wave Runner saying, for the gamblers, it's easy until it's hard, and then the toughness takes all the profits and then some. Yeah. Yeah, so that's basically um, the old story is it works until it doesn't. And it was really simple last year. I can tell you just on our platform, we had a bunch of portfolios that were up 200, 300%. I think, um, yeah, SoFi to the moon, right? Um, yeah, so I'm just bringing that one up real quick here. Yeah, I mean, SoFi is an interesting situation, I think, as far as that one goes. Not too many companies already got their own $1 billion football stadium and all that. These guys had financing behind them, big money. So it's very interesting. Matter of fact, if you're a WaveTech user, you'd see we got a buy signal at 1528 just a couple of days ago. So see where that one goes. Sold it out. The last sale was up here at 1111 of at 23.99. So bought back at 15. Not a bad trade. Original purchase was 15. So it's buying it back where it originally bought. But anyway, listen, folks, uh, definitely check out everything we're doing. Go to kendallreport.com/wavetech. You can do the same thing /expert portfolio. Actually, just expert, no E. And you can go there, and then you can also go to the Kendall Report trading room as well. And that's you can get there by going to kendallreport.com/trade. So I always do the advertisement at the end, but that's okay. I don't feel like it would be credible if I put out a lot of information and you got to listen to the sales pitch up front. So anyway, yeah, that's it. I'm just reading a couple of comments here. Yeah, best of luck to all of us in 2022. We'll see how this plays out. But yeah, it's yeah, I knew I'd get out here and get on a couple rants, but it's all good. So folks, I'll be at Sunday night. A couple more days, and we'll get back to a normal routine and see if we can figure out what the markets are going to do and go to next. So happy New Year to everyone. Be safe, and we'll see you in 2022. So have a great night, everyone.